Hey everyone, welcome. Good to see you guys. Sorry I wasn't able to come back and do the live stream yesterday. I had some stuff to do for my daughter's school and it went a lot longer than they told me it would go. So I apologize for that. And it's actually today I still need to do some stuff after we're done with this. So hopefully we'll be able to stay consistent. Next week I am traveling, so I don't think I'll have to miss Tuesday, Wednesday, maybe Thursday as well. But then we'll be back on track and we'll be doing these basically daily again. So hey James, good to see you. Hey Marlon, Kay, Lise, Tony, and Chester. Good to see you guys. All right, so let's see what happened. Let's see what went on today. Today we got some very interesting movement in the market today. So we gapped up and then basically went nowhere. So two things of significance. One is the gap up above the previous high, so all-time high today. And the fact that it didn't really move anywhere after it made that gap up. Now, when I look at realized volatility, I include the gap because if I do just say a 2-day bar, what you'll see is, you see, it's just a big bar. So every 2 days. So these are big bars, tiny bars before this big bar, and then big bars after the big one. So it's just a happenstance that we chose daily because there's daily sessions that, hey, this is what it looks like. But if we just smush those two bars together, you can see that that was a lot of movement over the last 2 days. You don't say, oh, this didn't move very much today, just during market hours and completely ignore the aftermarket hours. So that still counts as realized volatility. So realized volatility really hasn't come down. VIX came down a little bit, but still above 16, not where we were trading before. If we look at VIX earlier, you can see we're just kind of now back into these more kind of sort of regular period where we were before we moved up here. If we can maintain VIX right here, which is really interesting, but the realized volatility continues like this, people are going to have a really hard time trading. Actually, market makers are going to have a really hard time too, because it'll be easier for you to hit targets, but at the same time, it'll be easier for you to hit stop losses. So you just have to be aware of that. It won't be that your premiums that you're paying on the options are not wildly overpriced anymore, but you may still get stopped out fairly easily. And then, but on the flip side, you get to your targets a little bit more easily as well. So it'll be an interesting time period if this VIX stays down here and this volatility continues. Right now, I personally, normally I said, hey, if we get confirmed above the EMA 8, then I would become a +2 bull again. That I said that a couple of weeks ago. Not yet, not quite yet. I need to see that volatility come back down a little bit before I am comfortable going to a +2 bull. Just because, we really, this week all we did was chop sideways until today. And the only reason why we're up is because of that gap right there. I guess we gapped from Friday to Monday also. So that's not normal price action. It's not something that I am super comfortable with going long. Chris Pulver earlier in the Gamma report on Monday was talking about a divergence, increasing move like this, and then like this. So if we start chopping in a wider and wider range, that's volatility without the directionality that you think that is going to be there. And that can be kind of dangerous for especially traders. We don't see it too often in the markets. So it can be very hard to trade in this time period, because even if you go into a neutral trade, sideways trade, you can get blown out on either side fairly easily. So I just want to make sure, I want to see strong evidence that that's not what's happening right now. before I'm comfortable going to a +2 bull. Let's see what you guys are saying. Kane must like to fly. I am kind of neutral on it, but it just so happens that during this time period, actually through the end of the year and end of January, actually, I have a lot of flights coming up. Good seeing you this morning in the free scanner webinar with Alex. Yeah. Did you guys enjoy that? It's a really great premise. And I really do wish that I had thought of it because it is something that I'm in all the time. But, sometimes you're there, like it's right in front of your nose and you can't see it. But I'm glad that he made that software because it's a really great premise. Your GEX scanner still trumps any scanner. Thank you very much. Good afternoon, Illinois grain farmer. No sound. I think everyone has sound. Otherwise, people wouldn't be commenting. Yeah, I think we got sound. So let me type to @James Kwong. James Kwong. I'm pretty sure everyone has sound. Okay, so this is promising, but it is a little uncomfortable because one, we never really tagged that MA50, and two, the volatility has not calmed down. The realized volatility has not calmed down yet. So it's very difficult. It can be very difficult for trades. Last week after earnings, I said JP Morgan was looking good after earnings, after it bounced up. And I said it over here. I said it cleared the EMA8, it cleared the quarter date VWAP, and it was looking perfect at that. But volatility got the best of me, put my foot in my mouth, and then it started coming back down below the MA50. And today, now trying to challenge it again. So this is what I'm talking about. Volatility trumps technicals. This was a beautiful, beautiful, beautiful setup, technically. But in a high volatility environment, you just never really know. Your odds go way down, more down, basically 50-50. It basically cancels out any edge that you think you have with technical analysis. So that makes this time period pretty difficult. So unless you're going really short term, if you're day trading, you can still maintain, or overnight trading, you can still maintain some pretty good trades or decent win rate. But if you're swing trading, it makes it really difficult. So you may have noticed across your services, swing trades, either you're holding them even longer and trying to get through this noisy, choppy period, or it seems like you're taking stops and you're getting stopped out and taking a bunch of losing trades right now. So just be aware of that. You always want to keep that in mind. Hey, Pete, good to see you. And let's go back. Okay, so now that we're here, I just need, this is a little far, that single day move is a little uncomfortable because normally that's a little overextended. You want that pullback again. And again, that's the challenge with volatility. You can have these big moves up and big moves down, single day normally. Over here, it took a really long time for us to get to that point where we felt like we were a little overstretched and needed a pullback. Here is a single day. A single day bounces up, we need a pullback, and then that pullback could happen in a single day. So it just makes everything more difficult. You either need to extend your time frame quite far, or you need to pull it back to intraday. Is there a sector rotation right now? We'll take a look at that soon. Over here, what we're seeing was that the sectors kept flipping back and forth. Now that we're at an all-time high again, my feeling is that as long as we can maintain this, then we should be able to get a clear sector. And that may have started as soon as today or yesterday. We'll take a look at it in just a moment. But if we look at the other indices, that should help us out as well. So if we look at the Dow Jones, what we see is that we cleared this high right here on Monday. We were already above it, and we were above it all week. So this wasn't too much of a hurdle for the Dow Jones. The difference was this high right here was not the all-time high versus the S&P. So you can see that Dow Jones is doing quite well. This is also a little overextended. We probably expect that to come back down, sort of like this. Expect it to come back down to the EMA 8 soon. And then if we look at the QQQ is looking similar to SPY. It's only this gap up today that got us above that and looks a little bit overextended, kind of like this. Okay. But that's no guarantee that it'll happen right away, but it will have to happen reasonably soon, 1 to 2 weeks for sure. 1 week more likely. And then if we look at IWM October 10th, almost immediately it was already above it, but very, very, very choppy up and down across it and haven't matched these all-time highs yet. So this is sort of what we're talking about in terms of expanded volatility. You can see that that is slightly downward sloped and this is upward sloped. And these time periods, this type of action is very difficult to trade. And normally you just wouldn't trade it because you're probably not going to be able to find an edge in there. And so you just avoid it. You go somewhere else that is not doing this. But a lot of the major indices seem like they may be doing it, which means a lot of the stocks are probably doing it as well. So that's a little bit of a challenge right there. Let me take a quick look at RSP. Equal weighted. Today, the high went above, but the low, right? We traded back down inside the all-time high. But again, all week we've been up above this bar right here, similar to the Dow Jones. And I might as well look at the equal weighted QQQ. Okay, similar story. Okay, so Dow Jones, equal weighted QQQ, equal weighted SPY, they're looking pretty healthy. So overall, that makes me a little bit more comfortable to go +2 bullish, but I'm not quite there yet. I still do want to see that volatility drop some. Otherwise, there's going to be a lot of uncomfortable positions to hold on to. And then you might get stuck in positions and you're like, oh, I'm just sitting here in these trades that are chopping back and forth. I'm up 20% today, down 20% tomorrow, back and forth. And then I'm not really making any progress. So either I need to just take my profits and sit in cash or find somewhere that's not behaving that way, that's not so volatile. Okay, so we can take a look at that sector rotation now. First way I'm going to do it actually is, we'll do all 3 ways. So bar chart, I'm going to first take a look at the market performance or momentum. And I just want to see what in here is above 50 in both the 50 and the 200 day, but isn't super extremely high like utilities is right here. 100% above their 50 day and 97. That is looking like something that is not sustainable. So let's take a look at this. Okay, so this has been quite a run for XLU. Okay, it does technically look very good. Look like it could bounce off that EMA 20 and keep on going higher. But how sustainable is it? Let's take a look. Actually, let's take a look how often, if this is on a monthly basis. Monthly. And I wonder why this isn't set up. Kind of. Okay, so once we hit these extreme levels, how long does it take for it to snap back, basically, is what I'm looking for. So in general, we don't stay there even for 1 month. Okay, so the very next month, it's already coming down. Not necessarily super down, but within 2 months, looks like it's down quite a bit. Sometimes 1 month, sometimes 2 months. This one stayed for 1-2 months. And then came down the 3rd month. That's pretty rare. So we can expect that probably in the next month, maybe 2 months, okay, this is going to pull back down to 30s and 40s. So XLU, just be careful. It could have one more leg up, and then we might see that start to collapse. So I'm going to make a note of that for myself. Watch for XLU topping. Okay. And then, I guess I went directly there. Let's go. Oops. Okay, let's see if there's anything else we can notice. So 55.55. This is indicating room for growth, but I don't know if this was on its way down or on its way up. So I would have to look at that. So XLRE. Okay, so it's been a lot of chop. Overall, slightly bullish. Okay, so it does have room to run up. That doesn't mean it's going to run up right away, though. So it could kind of chop around or pull back a little bit before it goes up, sort of like these times right here. We just don't know yet. Okay. And this looks pretty low. Consumer staples. We got some divergence in discretionary. Let's take a look at those two. Okay, so it's trying to get above its MA50. It's been trying. It's been consolidating across here. So this would be something that I would watch to see if it breaks above its MA50 and MA200. So XLP break above MA200. And I might even set an alert there. Why not? Let's go to XLP crossing up above its moving average, 200-day moving average. Okay. And then discretionary. What's going on with discretionary? Staples, discretionary. Yeah, that's quite a divergence. So okay. So this looks like it could be on its way up. Okay. We haven't seen it turn around yet, but where we are right now is a decent place for it to turn around. This is still monthly, right? Yeah. Okay. So if we take a look, a lot of the recoveries happen around this area. Maybe slightly below where we are right now. Okay. All right, so that's from a momentum perspective. We take a look at our sectors over here. Okay, overall, it looks like mags and metals are still very much the focus. Okay. Mags hitting an all-time high today. Looking pretty good, not as overextended as the SPY. So those we would watch very carefully because they're like 34, 35% of all the market cap now. So once we see a dumping of Magnificent Seven stocks, we can expect the SPY to really come down. And I explained a couple times, I'm pretty sure in the Gamma report and in the previous post-market review, how there's a lot of trading done on margin at the moment. And if this starts moving down, or if the SPY starts moving down, then we could start seeing a flood of margin calls, and that would be a snowballing effect. So I'm going to be looking to mags to kind of tip me off to whether or not, if that happens. So that doesn't mean that I'm bearish or that I'm expecting it to happen anytime soon. Remember, I'm still +1 bullish, considering to go +2 bullish. Okay, so don't take that for the context that it was provided in. Okay, so we just want to be aware that if there is a sell-off, it could be a fairly rapid one. And then, what was it? Metals. Let's just quick look at gold. Gold looks like it bounced, so I took an anticipatory trade not in front of you guys, but I told you guys about it during the post-market review, and it has gone up kind of since then. It's so more or less, I guess after today's action is more of a chop sideways, getting stuck at that EMA 8. If it's able to break above that, we should be able to challenge this 400 area, maybe pull back and then try again, maybe 2 or 3 or 4 times. For now, it's way too early to say, but this was an early entry into a potential pullback or retest of the 400 level. Okay, so nothing too special yet so far. So we're probably going to need to look to the top sectors view. I'm going to refresh that just in case. Okay. And what I'm seeing right away, lithium, 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 lithium. Okay, looks like early signs of solar. Yeah, early signs of solar. Uranium. Not too strong on uranium, but it looks like early signs of recovery in uranium. All right, let's look at solar and uranium. Tan. Okay, nice bounce confirmation. I'm just not super comfortable with that gap up, but it's not too far from the EMA 8. So this is not bad at all. This is looking pretty good, actually. And then uranium. Okay, so regained its EMA 20, fell just shy of its EMA 8. So I'd be comfortable on a breakout of the EMA 8. Let's take a look at individual stocks. I should have both of those. Yep, uranium's right there. Not quite. You would wait for that to cross above the EMA 8. Not quite. LEU, early mover. Okay, looks like LEU is going to be the strongest of all of them. Earnings on November 5th. So it got a couple weeks right there. Short term reverting to long term. Love seeing that in the post-market show. Come on. And then just today, actually. So LEU's starting to look pretty good. So I'm going to put that on my list. And then let's take a look at TAN. Do I have TAN? No, I don't have TAN. Okay, nice. It's still reasonably early, so we could maybe use this to demonstrate some portfolio stuff. Oops, that's not what I want to do. I lost you guys. No, okay, we're back. Okay. Let's see. Is there a China tariff 100% due on November 1st? Meh. You know how those tariff things go, though. Delayed 90 days, delayed 90 days, delayed 90 days, delayed 90 days. So we'll see. I'm not that type of thing. It's not just me. The market is more like, I'll believe it when it happens, because the boy has cried wolf way too many times at this point. So I wouldn't be too worried about the tariff just yet. Okay. Yeah. Lithium, yeah, I do like lithium overall for a longer term. Yes, I do. Okay, so LEU's looking pretty good. And then, oh, you're telling me I should be looking at lithium, not tan. Is that right? Okay, thank you. Thank you very much. I probably got myself a little confused there. So I should have lithium. Yeah. Okay, Albemarle taking off. So if we talked about it here when it was in this kind of consolidation, pulled back to the EMA 20 and just took off. So I don't remember exactly which one. I had markings on this chart. I must have gotten rid of them. I had a Albemarle trade. Well, not important. In any case, nice move on Albemarle. Too late to chase into that, even though. So what we see is yesterday, it was a nice short-term to long-term move. Okay, so yesterday entry would have been great, and then you would have gotten advantage of this single day move right here. And the SQM, meh. Tesla consolidating. Once it breaks out of its consolidating, it could move quite a bit. Right now, looking like it's favoring bullishness more than bearishness, but we'll see. ENS looking pretty good. If this was a confirmation bar, it's almost a confirmation bar. If it was green, it would be a confirmation bar. ENS is looking pretty good. I'll keep that in mind. ENS. Lucid. Nope. SGML, no. And Lithium itself kind of broke out right there. That's interesting. So that must have been because of Albemarle. Yeah. Okay. So I've got two candidates here that I like, both of them exhibiting short-term to long-term, right? LEU. Yes. So I like it. I like it a lot. Okay, so this was... Okay. Not a super strong one there. Actually, I would do it like this. It did tag that EMA 20. Okay. So that's looking pretty good. So how would I construct? Just say I have a brand new portfolio. I just funded my account. How would I construct my portfolio around this? So you guys may recall that I floated this idea of maybe I will have a service where you guys get to watch me double an account, like 5,000 to 10,000, for example. And I'm still floating that out with the team to see if there's any challenges with that legally, regulatory. And so far, it's looking pretty promising. So if you guys think that type of service is interesting, just let me know. The more like comments I can throw at them and say, hey, let's find a way to do this, even if there are some hurdles that we need to get through, then that just makes the case stronger. So if that's interesting to you, just let me know, send me something. So just say we start out with a $5,000 account. Okay, I've already taught you guys and told you guys about 10 positions max and all the rules behind that. I'm not going to repeat that now. So let's just say I'm just starting out, and remember I'm at a +1 bullish at the moment. Maybe okay with moving up to a +2 soon. Not yet though, not yet. Okay, so if I want, just say I'm just starting out, opening up my positions, I'm considering that LEU and the ENS. Well, first thing is I got to decide, do I only want one of these? And that way I'm at my +1 bullish, or do I want both and then find some short right here so I can maintain my +1 bullish? And then later on, maybe I find something else that I'm bullish on, and then I would have to have another short in order to balance that out. And there was a great question that I got, I think it was yesterday, about, hey, well, you told us how if you're long here and you're long here, well, then you're short here, and there was like a COVID type of event. Well, if you're all in spreads or butterflies, how does that one short help you cover? How do you get that 3 or 4 or 500%? That was an excellent question. So I'll go into that right now and give you at least an idea of it. So LEU long. What I want to do is I want to see if there's a lot of correlation between LEU and ENS. If there is, I might as well just pick one of them and not both of them. Okay. So, or because I could just do this and it'd be effectively the same thing. So let's take a look at that correlation. And I lost you guys again. Let's see, chat. Sounds cool, like that idea, would be very interested in a program. Sounds like a great idea. I tune in, would be interested in a program. Really like to see app. Okay, great. Thank you guys. I'll send that over to the publisher. So, and the idea we were kicking around was like, okay, well, come watch Kane double this account. And then if he fails, like if it drops by 50%, like down to 2,500 or 2,000 or something, then you get your money back because I failed. Okay, so something like that to make it interesting. Have you posted the 10 rules in the members area? It wasn't 10 rules. It was a rule about, hey, 10 positions, no more than 10 positions in a small account, and and a blend, right? So how do you know? Well, for sure, not more than 5 of either longs or shorts, and then balancing them out based on your score. Okay, so no, that's not in the members area. That's just been in the post-market live streams. And maybe at some point I'll go through and I'll consolidate everything and put things into a members area when I have time. You might be waiting for a little while if you want that to happen. If you want me to organize it for you. Okay. So LEU, ENS, I want to see how correlated these are. So I'm going to look over here for correlation. I want to look over 20 trading days. 20 trading days would be 1 month. And I want to see the correlation to S&P 500. So we're taking a look at LEU and ENS. And we want to take a look at LEU and ENS. Okay, so correlation between the SPY, both of them have very low correlation to the SPY, and LEU has negative correlation to the SPY. So that's pretty good. That's pretty good. And so that almost guarantees they're not going to have very good correlation to each other. And in fact, they have 0.56. Remember, my threshold for correlation is 65 over the last 20 days. Okay, so 56, perfect. I can go into both of these if I want to, at least from a correlation perspective. So if I go over here and I say, okay, well, I can't decide between the two of them, so I want to go long both of these, let's just say, okay? I now have to look for a short. So let's do that. Let's look for a short. Okay, so for that, I am going to go over and take all of these charts and reverse them to show me the weakest ones. And rather than go through 6 settings right here, I did go ahead and save a new layout with the bottom. Okay, too many. Oh, in any case, let's see if we can find any in common. PBJ, XLP. Looks like more PBJ. Agriculture, no. Wood, that's interesting. Wood was favored a couple weeks ago. Looks like mostly PBJ. Can't really find anything. KIE. Yeah, maybe KIE also. Okay, we'll take a look at insurance and food and entertainment, or food and beverage. Sorry, food and beverage. So let's take a look over here at PBJ. Oops, or PBJ. It's a decent number of them. I'll download that. And what was the other one? KIE. And there's a good number of those as well. So I'll download those. At this point, I don't really care which one is which. So I'm just going to take a list of all of them. And it looks like we don't have any foreign holdings. In any case, I can just paste it in, and then TradingView will automatically reject them if they're no good. So let's go in, and I'll put in a new list. I'll call that short candidates, short sectors, PBJ and KIE. And we'll run through these real fast. There's other ways I could do this, but okay. Earnings. Kind of earnings. Earnings might be a problem. Let's see if there's any where I can completely avoid earnings. KNSL just had earnings. Okay, so I probably still want to avoid that. Or I just had earnings. Looks like they just had earnings. Or, okay, this one's a little further along. WRB wouldn't go short at this moment on that, though. Did you lose me? I don't know. Can you guys hear me? Okay, so I think we're okay. Maybe there's just massive delays, but so I'm gonna keep going unless I see you guys type in something else. Okay, so ALL earnings are making this difficult. All right, thank you, John. Okay, EG, but that I wouldn't go bearish on that right now either. So it looks like I might have to look for a shorter term. Candidate. Okay, so it may be something that I have to just put on and then maybe put on a new position later. Okay. Okay. All right, so we'll go with one of these guys. You know what? Let me put this into Stock Fetcher so I can see a whole bunch of charts at the same time rather than going through them one by one. Okay, that's better. Look how, look at that downtrend on Nomad Foods. That is amazing. Okay, so I'm going to take a look at that first. And hopefully they have liquid options. Let me take a look at that also. Not the most liquid, but not bad. Not terrible. I mean, look at this. This is basically a straight line down. Okay, so I'm very comfortable with Nomad Foods. I don't think I need to look any further. So over here, just the liquidity is not great. You know what? Let me find ones that are in the S&P 500 also. Yeah, it's going to be hard to find good shorts right now in this market. It's super bullish. So you're going to have trouble finding good shorts. But remember my goal here, the whole reason why I'm looking for a short is not because I'm bearish on the market. My whole idea here is that I am bullish on the market and I want to get into more bullish positions than my portfolio, then I'm bullish on the market, right? And so I'm looking for a short in order to balance this out. Okay. And so this is basically my attitude here is that it's like a hedge. And so if it's a hedge, my attitude should be that I'm probably more likely to lose than I am going to win. But it's there in case there's a COVID event and that it can make up for the losses that I would suffer on these two if there was a COVID-like event, okay? So I need to keep that in mind. So I look for something that has as high of a probability as I can possibly find, certainly more than 50% or 60%. If I didn't feel it had at least that percentage, then I would pick one. I wouldn't bother going to two. It's like, you know what? I just have to pick one of these two and stick to it. But if I can find something that I feel has a pretty good chance of winning to the downside also, and can provide me that protection in case we do hit a COVID-like event, then that's why this is here. Okay, so if this ends up losing, I'm not going to lose any sleep off of it whatsoever. I just want to make sure that it doesn't lose so big that it wipes out the gains from these guys. And if it's 1-1 right here, and I only win on one of these, so be it. That would be the absolute max scenario that I would want to see. But hopefully it's only because we would stop out, then we would actually end up being only part of the profits of one of these two. Okay, that'd be the ideal scenario. But I guess the ideal scenario is we win on all three, right? Because I am still picking something that has a higher than 50% probability. But if it ends up losing, then it's not that important. My portfolio, if everything goes well, will still end up making money. Okay, so I don't care about the performance of the trade. I only care about the performance of the portfolio. And even the short-term performance like this, I don't really truly care about that. I care about repeatedly over time, over a quarter, is my portfolio going to be profitable? Okay. So yeah, you're going to have a hard time finding good shorts right now. So let's do this. Let's make sure it's market is SP 500 just to help with the liquidity on the shorts or on the options. Let's see if we can find, I mean, BRO, look at that. BRO is looking like a pretty good candidate. Say is TSN. Aeon. So BRO has earnings like tomorrow or Monday. TSN earnings on November 10th. Okay, I can live with that because basically all of them had earnings coming up fairly soon. So TSN, okay, so let's just say TSN is what I'm picking. So let's see how I would structure this. Okay, so here's the idea. I do not want to have this as a butterfly or a condor or anything similar to that. Because on a butterfly, I'm going to have risk. Can I do this? I'm going to have risk on two sides. So if I have a COVID event, so even if we start right here, and it goes down to my target, then that's where I would make a whole bunch of money. But if there's a COVID event and it goes down way down here, then I'm going to lose on this position as well as my longs. And that's not the scenario that I want to be in. So I cannot express my hedge as anything that has risk in the direction that I want it to go. So in other words, would be a short. I cannot express it in anything that has risk to the downside. So it's got to be something like this. That would be a vertical. So there's no risk of losing to the downside. Or it could just be a put. Right, so there's no risk of losing to the downside. It could be a broken wing condor, or sorry, a broken wing butterfly that looks like this. That could be okay, because again, doesn't matter how far down I go, I could lose. However, it is unlikely that if I hit this win right down here at this minimum gain right here, that is going to make up for a significant amount of my longs. So again, that kind of disqualifies the butterfly, okay? So really, my candidates here for that short are the vertical or just a put. If I choose the vertical, okay, and just say, this one ends up with minus 100% and minus 100%. I have to ask myself, how much do I want to be hedged? If there's a black swan event, am I okay with losing 20% of my portfolio? If the answer was yes, then I don't even need this thing, okay? But since I'm just a +1 bullish, my answer shouldn't be yes. So because that would mean that my reward risk is off. I'm +1 bullish, I'm expecting small baby gain, or I'm not necessarily baby gain, but small-ish gains. And then to lose 20%, that reward risk ratio is off. Okay, so I shouldn't be okay with that. I can be okay with just losing one of these positions. So if this was 100%, okay, and basically that means on a COVID-like event, I would just lose 10% of my portfolio. Okay? So I should be okay with that. Okay. So basically, I want my TSN to be able to make at least 100%. Because if it can make 200%, great, then it covers both of them. If it can make 300%, great, I actually make money onto the downside. So if I choose to express this as a vertical, I've got to make sure that it has at least 100% gain potential. Okay, so I'm not treating this short like a normal position. I'm treating it specifically as a hedge. So you may be like, Kane, I'm not that aggressively bearish on TSN. I think maybe it can kind of float down in the next 2 weeks, but I don't think it's going to gap down. Well, sure. We're talking about a COVID-like event. So it would drop, it would tank like everything else. Okay. So 100% is kind of easy because you can just do the straddle to at the money. So if I do TSN out to November 21st, So it looks like I don't have an expiration. So I would go, we'd have to close this out early. We'd have to be aware of that because of earnings. So I could always just do this. Okay, just straddle the at the money, and I should be able to get, okay, that's not nearly liquid enough, but I should be able to get, oh no, I'm sorry, this is 2.5. Okay, so that would be 1.25, would be half. If I can get in at 85 cents, great. Then I have more than 100% profit potential. Okay, if I needed more than that, then I start going out the money a little bit. So either I can shove my strike, my sold sell strike lower. Okay, so spread it out like this. Like keep the buy and then do the sell. But then my, whoops, what happened there? I am buying the 52.5. I'm selling the 47.5. There we go. Okay, so now I'm putting in $1.50 for a $5 spread. All right, so that's about 3, so about 200% profit potential, about roughly. A little bit better than that, I think. Or I can keep pushing this out, okay, depending on what potential profit I want. Okay, but at some point, it may be too expensive. I might in this case, we couldn't get there because these are all super cheap. But in some cases, if I widen this out too much, I'm going to price myself out of it because it's going to be a debit of, say, $1,000, like $10, $15, and my max allocation on the $5,000 account is $500. Okay, in this case, it didn't really matter because these are super cheap out here. Okay, so just we want to be aware of that. The other thing that you can do is you move both. You keep that minimum strike distance the same, 2.5 apart, and you move both strikes up the ladder. And that way you can get the potential of several 100% or 1,000% plus. If you do it that way, then you have to understand that now you're lowering your probability that you're actually going to make money on that trade in a normal circumstance. So you're purely looking at it as a hedge. Okay, so I just want to make that distinction right there. The other way that you could do it, which is usually my preferred way, I like doing it this way a lot better, is forget about a vertical. Just say this is always going to be a straight put, a basic put. Okay. And that way I'm never limited on my potential profit. And so if there's a COVID event, this thing could make 2, 3, 4, 5, 6, 7, 800% or even more, and more than make up easily any drop over here. Okay. And so that's an important distinction. That it was very, very good that I forgot who asked. I think maybe it was Sean who asked. Well, whoever asked, that was great observation, great question. And you definitely want to be aware of that. You're not treating these shorts when I'm bullish. I'm not treating my shorts the same way I'm treating my longs. And when I'm bearish, I'm not treating my longs the same way I'm treating my shorts. My longs become the hedge, and I start adopting that. So basically, 99% of the time, if I was -1 bearish, okay, then it would be, my longs would just be basic calls, and then I could structure my puts or my shorts for some higher probability, better reward risk ratio type of trades. Or I can do the verticals where I have several 100%. I do have techniques of finding higher probability, like outsized, like mismatched pricing, basically, so that I could get let's call it like a 1,000% return on a vertical. And and the market prices it as if you have a 10% chance of that happening. But in reality, because the mismatch pricing and the skew that's in the market, you actually have a 33 or 30 or 40% chance. Hey, well, that's still less than 50-50. But if you can do a whole bunch of those trades, then you'll end up making a bunch of money. But that's a little, I mean, if you're playing that game, you have to be okay with a lower winning rate. You have to be okay with losing more than half the time. You end up making a bunch of money, but you have to be okay watching yourself lose. Most people don't have that type of wherewithal. So that's why I never release the program and I never really talk about it that much. But just so you know, it's possible. It's possible to structure it that way. For now, just make life easy and just say, okay, if this is the opposing position, just so I can get more longs on into my portfolio, then I'm just going to always express it as a basic option, a single option. Okay. So TSN, I can go short. We already said it wasn't super liquid, but I'm going to go basically at least a 70 or 80 delta on this. I want to increase. Okay, look at this. So you have the same deltas are already all one up here. Okay. So here I could go say 55. Right? There's zero activity on these. Okay, and they're getting pretty illiquid. So basically, yeah, this is nice and tight, 390, 410, and everything is, so I say, okay, let's take one of these. It would allocate about $400 to it. I'm a little under allocated. Okay, so if I did a 21st of November, and these are not trade recommendations, by the way. I'm just example building a portfolio for you guys, okay? So 21 November, and this was switch strike, 55 strike put at 4.00. That means I've allocated $400 here. I wanted to allocate 500, so I'm 100 short. So my hedge is a little under. I just need to keep that in mind. But when I put these on, maybe they'll end up being roughly $400 as well. Okay, so basically what that tells me right here is when I look at these, if there's a number of contracts that puts me over $500, I definitely won't want to do that. I want to under allocate because my hedge is under allocated already. Okay, so now I go over here and I take a look at LEU and say I really like LEU. I think it has good profit potential. Again, we have this earnings problem right here, and I should say challenge is not really a problem or something to be aware of. Okay, and it's happening the evening, so I could hold it all the way up to November 5th. Okay, so let's run with that. Let's just say I think, okay, between now and November 5th is how many trade days or how many calendar days? Is this LEU? Does it have weeklies? It doesn't have weeklies. Okay, so it doesn't really matter. If I'm going to go into this, I basically want to go in with the November calls or a structure of November calls. So now I ask myself, do I want just straight calls? The answer is no way. Look how expensive these things are. There's no way I could get in on this on a $5,000 account. I couldn't even afford a single contract. So we're going to go in and we either need to create a vertical or we need to create a butterfly. Those are my two options. I could create other stuff, but I'm only going to consider butterflies and verticals, which is what I do in real life anyways. So LEU, we'll try a butterfly. If I have a target for, I I've never figured out how many trade days, huh? Let's do November 5th is 12 trade days. Okay, so 12 trading days, we can probably move 1.5 to 2 ATRs. So if 2 ATRs would be like 90, man, this thing is pricey, huh? That'd be 470. That would take me back up to these highs right here. Okay, which is pretty good. There's not really any resistance here. I think that'd be a little aggressive. So let's just say maybe over here to 431. Okay, 431-ish in that ballpark, just to make it a little bit easier for me to hit my target. So I could go 430. Okay, and these are going to be, if I butterfly this because the price is so high, then it's going to be, number one, kind of pricey to get in, and number two, I'm really going to have to work it because the bid-ask spreads are wide. I mean, dollar-wise, they're wide. Percentage-wise, they're okay. So if I do this, well, let's just make up a random spread and just see. It might be priced out anyways, so there'd be no point in doing this. So just go 380, 430, and 480. And just price that out. Yeah, $8.70. That's too much, right? I need to be within $500. So we're not going to do that. I'm just going to go right there at the money vertical. So I could go just below and go in the money, both of them in the money. In which case I did that wrong. Okay, I could be debited $4 in order to make $6, which shouldn't be the case. So this is extremely unlikely to execute. Look how wide that bid-ask spread is. Okay, so this is already becoming a bit of a challenge because it's just, with such a high dollar price, we really will have to work things. And then when I exit, I'm going to have to work it again. And there's no guarantee that the liquidity will be there. So I'm going to skip on LEU, unfortunately. So that means, for practical purposes, that means I can't trade LEU, and which means I don't need the hedge either. So let's just pretend, okay, because I want you guys to see what happens as I build this out. So let's just say I decided to trade it anyways, okay, but just so you know, normally I would not do this. This is just an exercise now, just so you can see how the portfolio ends up being constructed. So here I would just go in and straddle that, or I could do, it'll be easier. I wouldn't be making as many assumptions if I just do one in the money, buy in the money, sell out of the money, okay? That's 10 apart. Current price 383, so not quite 50%. So 385 would be right in between those two. So I should pay less than $5 for this. And so 435, let's just go with it. Okay, let's just say I could get it at 435. Okay, so this would be the 380, 390 call. And that is done at $4.35. Okay, and then let's just do it real fast on ENS. Okay, and we're already over time, so I want to do this quickly. So let's just pretend we'll just do the same thing. Okay, not liquid. So again, I wouldn't be trading ENS either, but let's just pretend. Okay, same deal here. Should 2.5 would be 50-50. 121.46 is more towards the 120 side, so I should pay less than $2.50. Let's just call it 230. Okay. So I've allocated 435 here, and then I've got an ENS 21 November. Got 120, 125 at $2.30. Okay, then I'm going to do two of these. okay, because I'm trying to get to 500. So I do $4.60 or 460. Okay, and so now I'm feeling better about my a little bit under allocation on the short. And so let's just run these out. Okay, different scenarios. So market remains bullish. TSN ideal scenario, I win on all three of these. Okay, I make $5.65 over here. I make, what is this? $5.40, 540 right here. And then over here, we make an assumption on the put. So on November 7th, let's say we moved a little bit lower. Let's say we moved down to 50 and a half, okay? So this is TSN, November 7th, or 5th. Whichever that day was. What was it? 10th. Okay, well, we'll just go 5th because the other ones had earnings on the 5th, right? So we'll just go to the 5th. And just say it's down to $50.50. So that's minus 0.88. Okay, that chosen put, that 55 put, is presumably worth $4.50. Okay, it says 457. We'll round it down to 450. Okay, we paid $4. We sell it for 450. I only make $50 here. Okay, so that would be a normal case scenario. What if we're wrong? What if we lose on this put? So this is scenario one. Scenario two is I lose on this put, and just say TSN comes back and it comes back to its EMA 20, and so it comes back to 53. Okay, this thing is now worth presumably $2.50. So I lose $1.50. I got too many things open. Okay, minus 150. Okay. Let's just say maybe I don't make max gain on these because this spread is pretty far apart. The 380, 390 LEU. Okay. Oh, it's not that far actually. Let's say we lost it. Okay, maybe we lose it. Okay, so we come here. I'm not going to let this thing go to zero, but let's just say we lose a reasonably kind of significant amount. Just say 40, 50%. Okay, so it goes minus that times 0.5. Okay, but I win this one. Okay. If I do 282.5, and then what if I lose this one, both of these? Okay, so it equals minus that times 0.5. Okay, and then let's take a look at a giant melt up. Okay, so this is a melt up. Okay, and just so, well, melt up, I don't have to do precise calculations because these will max out at their full profit, and this one will lose its entire value. So I'll go minus 400. Okay, and then let's look at a COVID. Okay. Now COVID, what we'll want to see is these two are easy. And now I want to see, okay, or sorry, minus 435 minus 460. Okay. So basically, TSN, what if it doubles? So so if I make 400 right here, that's one scenario. If this makes a couple 100%, 200%, so I make 800 here. Okay. And then if I make 300%, I make 1200 here. Okay. So what I want to show you is these are kind of normal cases right here. My portfolio wins. Here it wins quite significantly, right? 2 slots, 20% I gain, or is that right? Yeah, a little over 20% of my portfolio. My portfolio balance has gone up by over 20%. Same with this one. This one is a little bit more of a mixed bag. So I have one slot, which is 10%, and then I make 1/5 of that. So my entire portfolio is up 2%. That's pretty good. That's pretty good. This should be a rare case. I shouldn't be hitting losers on all my positions when I'm doing verticals. But okay, how bad is it? I've lost not even 1.5 slots right here, 15%. Okay, melt up, I make about the same, okay, plus 15%. So that's good. COVID scenario number 1. Well, this wouldn't be much of a COVID scenario because all I'm asking for is for TSN to go down, or sorry, to make 100%. And so let's see what that would take for TSN to make 100%. So TSN, just say, let's keep that assumption that it happens on November 5th. Like, how far down does it have to go in order for this thing to be at $800? So I already surpassed it. So let's minus 4. And I wanted to do, maybe I will take the time to do more precise pricing for you, but we'll see. We'll see how, because visually it might be good enough. Okay, so TSN goes to $47 in a COVID-like event. Okay. In a COVID-like event. It just goes down to here. Then, all right, so visually, I don't think it's going to convince you guys. So I will do the math. Okay. So COVID-like event, in any case, if that happens, I'm only losing 10% of my account. Okay, because I basically almost perfectly hedged one of these. I'm losing $495. That's one slot's worth of allocation. Okay, so how is that? How is that? Like, how much would the S&P be going down for TSN to go down 47? Okay, so it's currently, so for it to move $4.38, how do I figure that out? So the way that we estimate that is, $4.38 divided by the current value of 51.38. Basically, it has to move down 8.5%. Okay, so what's the beta of TSN? Beta. 0.57. Okay. Now, this is a poor estimate because when COVID-like events happen, the correlation and betas go way higher. Okay, so this is like I'm being super conservative here. but 15%. So SPY goes down 15%. If we go down 15%, yeah, right there. Okay, oh, shoot. That was basically right here. Okay, that's 15%. And COVID did do that, right? COVID was okay. What's this? So basically, the initial week's move was 15%. Right? If that happens, then I assume that those other positions went to zero, which, there might be some value left in them, but this is sort of a worst case scenario. And we're just being conservative at the moment. So then the hit that I take is just 10%. It's just one allocation's worth. It's not that bad. And like I said, because of the beta is going to go correlating, so actually you would get vast improvement on this. And at the same time, the other thing that we didn't do in this calculation is in a COVID event, the volatility wouldn't stay the same. It would jack up like crazy, right? So let's take a look at how much volatility changed. During COVID in the first week. Okay, so we went from about here. So just call it 48% from 15% to 48%. So it tripled just call it 3x. Okay. Are these our percentages? Okay, so, well, I guess we don't have to. So 30%. Okay, so now look at, where is it? 300, 3x. It 3x, so we need 300%. 300%. There we go. Okay, what is this? So, okay, the theoretical price moved to 1785. Okay, so let's put that in over here. So a little bit more realistic. So not 400, but I guess we'll just get rid of this one. Okay, 1300. You see that? And now that's how I can potentially make money, because I'm hedged right there. Okay, so now instead of being down 10%, I'm up 10%, even though I lost on these two. And so this is why you want that kind of hedge, that long-short portfolio in place. Okay, so I've been talking for a long time. I haven't looked up to see what you guys are saying. Was that helpful? Did that make sense? And was that helpful to see that? And does it make sense how we build our hedged position versus how we build our long position? All right, see you, Tim. Probably long gone. And Adam, thank you for running through this. Yeah, you're very welcome. Okay, so hopefully that made a lot of sense. And if you guys are seeing what I'm seeing on YouTube right now, you guys are way behind. So hopefully there's not that big of a delay. But in any case, hope you guys learned a lot. I'll probably go through all of this, or maybe snip out these things for education if we ever do get to the $5,000 to $10,000 doubling account type of service, just for everyone's education. All right. John says, yes, thank you. Prebnuts says, super helpful, very interesting. Thank you. Okay, great. Okay. Thank you guys. Hopefully that wasn't too heavy for a Friday afternoon and we went a little bit over and I didn't wear you guys out completely. But in any case, you guys have a wonderful rest of your weekend and I will see you on Monday. Okay. Bye, everyone. Have a great weekend.